Hello, everyone. This is an analysis of quick service restaurants throughout the USA. Overall, the industry is a market size value of $163 billion as of 2020, and its revenue forecast is of 383.8 billion by 2027. The share of restaurant locations in USA shows us that the two, top three restaurants are Subway, McDonald's, and Burger King, as well as the top two, which are Subway and McDonald's, overall account for more than around 30% of all the share of the top 50 restaurants of the QSR industries. We will also know that McDonald's and Subway share a similar number of units throughout the entire country, but here in this graph, it was taken into consideration mainly fast food restaurants and not coffee shops that are labeled in the snack industry. The top five QSR quick service restaurants from top to bottom that we have studied through the 2010 through 2017 periods are as follows. Here we can see that during this period, we have the company units, the franchise units, and the total units, as well as the total sales that were given throughout a specific period. We will see this as it was mentioned through 2010 through 2017. McDonald's accounts for 32.4 billion dollars in sales, which at the same time is almost three times the sales of Subway, which is in the second place. So McDonald's has a really big amount of sales in comparison to the other top five QSR restaurants. As we continue to progress throughout the years, we can see that the sales of McDonald's stays the same up top, surpassing the 30 billion threshold, while Subway, Starbucks, and Wendy's and Burger King have around 11 to 8 million in sales. We will see in the next slides how Starbucks continues to push over to the second place. And as we see here in 2013, Subway steals, no, Subway continues to be in second place with sales of 13 billion, while Starbucks is continually getting closer with a 12 billion sales. McDonald's continues to remain at this threshold above the 30 billion sales. In 2014, Starbucks passes to second place as the top five QSR restaurants, leading to McDonald's being the loner in the top with its huge amount of sales, while Starbucks at the same time, while Starbucks at the same time is continually increasing and has 13 billion sales, and it continues to have the same amount of total units as McDonald's. The difference between McDonald's and Starbucks is that McDonald's has around a share of around 7% of own business, while 93% are franchise business, while Starbucks has a 60% company units owned, while 40% approximately is franchise units. We'll see that Subway, on the other hand, is 100% franchise, which also may lead to some of the factors in the next slides that will lead us to our final decision investment. In 2015, the tendency, the trends continue to be the same, and until 2017, where the max amount of sales is for McDonald's with 37 billion and Starbucks has a 13 billion sales as compared to last year of 2016 that it had 15 billion. It had a dive in sales, but it's something that we will continue to discuss in the forecasted sales in the next slides. Next, the top five QSR restaurants bottom to top, meaning the from place 50 to place 45 are as follows. Here, a trend wasn't specifically identified, but we can see that the sales vary from 440 million to 377 million, and this will be a typical range throughout the years. We will particularly focus on Tim Hortons, which is a Canadian company. But as we continue to progress on this chart, on these years, we see that mainly the top five QSR restaurants from bottom to top are mainly franchised units, and as we continue, we will see that now Tim Hortons does not appear in this graph, meaning that it moved up toward the most near positions to top one. As we can see now, Baskin Robbins also has entered the between the top five QSR restaurants from bottom to top. But it means that also restaurants that we see here continuously, like Captain D's or Baskin Robbins, or even Jamba Juice or Einstein Bros Bagels, are typically restaurants that have stayed within this ranking of the top 50 and are not moving either up or either down, but have maintained in this direction. Lastly, we can see that Antianis, Noodles, White Castle, Marcos Pizzas, and Boston Markets are the new contenders here in the top five bottom QSR restaurants, for which, as mentioned before, we decided to take a look at Tim Hortons, which was a restaurant that in the end was in the rank number 38, which it increased from being in the rank almost rank near 45. It increased its rank to number 38, meaning that it's moving up and that we should pay close attention to this particular restaurant that focuses on the snack industry. Finally, to have a better notion of the top three QSR to invest in the snack and burger segment, we have McDonald's as the first choice since it has the second highest share of restaurant sites with 14,000 sites, which were already mentioned, and an average revenue that is near three times higher than the second place. In 7 years, it has increased 14% this revenue to 37 billion. Next, Starbucks has a similar share of restaurant sites as McDonald's with a 10% share and 13.9 sites 13.9 thousand sites, while in 2014 it won the second place to highest revenues, beating Subway with a 32% increase in revenue by 2017, which is higher than the McDonald's one. We also wanted to pay a close attention to Tim Hortons since by 2017 it had 771 million in revenue with a 43% increase since 2010. This means that it went from rank 45 to rank 38 in 7 years and a higher increase in revenues than McDonald's and Starbucks. At the same time, a heat map of restaurants per capita was performed, where it shows us that the top 10 most restaurants per capita and the top 10 least restaurants per capita. Through this heat map, we identified that the southern and central states have the greatest value in restaurants per capita than the northern states here, which can be cross-referenced to this diagram here, where we can see that here we have the least amount per capita restaurants. On the other hand, on this region on the western side of the United States, we have an average activity for which if we want to maximize our profits or maximize the chances of increased sales, we should focus on investing on restaurant sites that are in the northern and southern states of the United States, considering also the weather and weather conditions such as hurricanes and also nature conditions such as earthquakes and other catastrophes that mainly in these states will be found, such as tornadoes and hurricanes. Finally, the decision to invest was to put money as investors in Starbucks, since the American Consumer Satisfaction Index is of 78, meaning that it is in the eighth place and 6 points from top one. The share price is of $119 as of mid-July, and the current ratio the financial health of this company shows that a current ratio over one signals good liquidity in the short term, while margin ratios are of 3.38%, which is below the 6 to 9% average on QSR industry. However, the return on assets increased from the previous analyzed period to 2.76%, while the debt ratio signals of 127% signals high amounts of debt and possible expansion plans with more long-term debt than short-term debt. So here it is important to pay attention on what are the possible next moves of Starbucks. Finally, in the forecast analysis, we compared the original values to the forecasted values, and we noted a pitfall in the 2007 sales, which led to understand that the forecasting may not be as accurate, but it may be due to market reasons that should be studied in depth and in a more qualitative means to understand these. So, but at the same time, we can see that by 2018, the sales are coming back to normal, which shows that the trend line is moving positive towards a forecasted sales that are going to increase. In this way, forecasted sales are predicted to increase in 15.8% by 2024 since 2019, and in a pessimistic scenario, sales will maintain similar to the ones of 2019, which are approximately of $18 million. And at the same time, in an optimistic scenario, the prediction says that a 31% sales in increase will go in Starbucks, meaning that it is a good company to invest in, since we are considering that Starbucks closed locations during COVID, around 2,000 units in China, and it had to pivot to carry out models and drive-throughs and deliveries. Also, Starbucks will relocate low-performing stores to high-performing areas to utilize and maximize drive-through functionalities. Also, Starbucks plans to expand units to 55,000 stores by 2030, especially in mainland China, where the business of coffee is in really high demand. With this information in mind, I hope this has been very useful as an investor so that you can decide as which are the best restaurants to invest in the quick service restaurant industry. Thank you very much.